Hello everybody, my name is Rayner and welcome back. So first and foremost, alright, this week we had a live trading webinar and I want to say thank you for those who actually participated because I actually had a good time, I had a great time with all of you boys and girls, alright, we interacted, you asked questions and I did my best to answer all of your questions and I hope I really did answer your questions because if I happen not to answer your questions, feel free to drop me an email at tradingwithrayner@gmail.com and I'll get back to you. And oh yeah, today is Mother's Day. So to all mothers out there watching this video, happy Mother's Day. And this week, right, on this week's market analysis, I'd like to talk a little bit on why we should not focus on the outcome on a particular trade, but rather we should actually focus on doing one good trade, and one good trade. And do not be, too affected by just the random outcome of one particular trade. So all this and more in this week's market analysis, and I'll see you there. So this is the chart of NL25, which is, I think, stands for the Netherlands 25. And this is actually a trading setup that I want to share with you guys because I would say my complacency actually caused me to miss an opportunity on this particular trade. So nonetheless, a background story on NL25. This is the weekly chart and you can see price trading higher. We have a series of higher highs over here. And notice how price is respecting both the 20 and 50 EMA on the weekly as well. So we had price bouncing it off, acting as dynamic resistance. And in recent months, price then took off this parabolic strong move towards the upside. So I was bullish on NL25, alright? Basically looking at the higher highs and higher lows and the very strong parabolic move towards the upside. I was always, I would say, looking for an opportunity to get long. And the level which I identified was actually on the daily chart. And it's about here, right? At this support area over here. Why is this support area of a key interest to me? Because looking at which on the daily chart, this area is actually the last line of defense for the bulls. Because if this area fails to hold, the next line of defense where buyers could potentially come in is at this previous resistance, turn support. And should price reach that area, the chart will be pretty messed up, pretty ugly, and I wouldn't look to get long anymore. So to me, the last line of defense actually is at this support area over here. So I've been looking at this product for a few weeks, and the thing is, I forgot to place my limit buy order at this support area over here. I was complacent, so I, go about doing my usual stuff, thinking that, I will always have enough time to get into the markets. But look what happened. Price traded lower, had a relief pullback, and then it did a false breakout towards the downside. And before I know it, price then traded and closed high on Friday, thereby causing me to miss the long opportunity which I've identified at this level over here. So this is a lesson for me, myself, right? Not to be too complacent. It's always good, to put your orders ahead of time if you have already identified a level you want to trade from. So this is a very good reminder for me and a lesson learned for me as well. So this is the chart of NL25, and to me it's a missed opportunity to get long on this particular product. So looking at which right now, the euro dollar, you can see that price is bearish and trading lower, right? We have lower highs over here, and price retested the 20 EMA on the weekly down here. So as you recall, I was actually bearish on the euro, and I went short, I think a couple of weeks back at this area over here, at this resistance. To me, this resistance area was the last line of defense. So it's actually the same story as the previous product earlier, the previous NL25, where I was looking to long at support. In this particular scenario, I went short at resistance and I got filled. And this week I got stopped out when price traded higher at this high over here. So again, two identical trading setups, but one would have resulted in a winning trade and the other would have resulted in a loss. And in this example, it would have been a loss because I set my stop loss to ATR, which is somewhere around here. This was my stop loss and I got triggered this week. However, looking at the previous example, which is NL25, my plan was to go long at support area here and my stop loss would be somewhere around here. From here to here is actually about 2 ATR, which is what I set as my default stop loss. So in this trade, had I taken it, it would have been in the money. But sadly, my complacency caused me to lose this trade, caused me to miss out this trade. As for the euro dollar, I was in this trade and I got stopped out when price traded and hit my stop loss over here at this particular swing high. So again, my point is that you can trade identical setups. They follow your trading plan. They meet your rules of engagement. They are basically identical in nature. One is long and one is short. And the result of a particular trade is random. That's right. The result of a particular trade is random. Your age only plays out when you're looking at the law of large numbers over the next 50, the next 100 trades, the next 1,000 trades. That's where your age will have the statistical validity to play out. if you're talking about 1 trade, 2 trade, 3 trades, the outcome is as good as random. So I would say do not be discouraged or do not be affected just by a few losses in a row, because this could simply be a drawdown, which is inevitable for every trading system that comes along. So again, I want to remind you that, according to the law of large number, you need a large sample size of trades for the odds to work out in your favor. And in the short term, the results are random, right? Short term, your results are random. So you want to look at the big picture, long term. And if you do have an edge in the market, you have a positive expectancy. So bear in mind the difference between the short term and the long term. So that's my point down here. So moving on, let's talk about the pound yen weekly chart. So this is a trade that my friend took, a trader friend of mine. He took it and I thought it was a good setup, and I would like to share them with you. In particular, this trade. So look at the pound yen. You notice that price is also in an uptrend. You see a series of higher highs, higher highs, higher highs, higher highs, and higher highs over here. And the red is the 20 EMA and the blue is the 50 EMA. You notice how price has been respecting the 20 EMA for quite a while over here. Then it broke through it and respected the blue 50 EMA. So in other words, right, if you look at it, you can say that both the 20 and 50 EMA, right, the zone in between, is a zone where I would actually pay attention to. I would call it a dynamic support, and it's an area of value to me. So if price comes into this area, it will catch my attention and I will look for trading opportunities to get long. And in this scenario, here is where my friend got long, right? I thought it was a good trading setup, and let me share that with you. Looking at the daily chart, this was the support, right, around 176 area. So he got long on this bullish pin bar over here. And why I say this is actually a good trade, because look at this. We have this support over here, and I can tell you when price is actually retraced higher and did a breakout towards the downside, there will be traders who are looking to get short. They will probably trade the short breakout by having a sell stop order just below these lows of all these wicks. So price did trade lower, right? You see price traded lower. And when price traded lower, the interesting thing is this: the path of least resistance is no longer towards the downside. Why do I say that? The reason being is that if there were additional selling interest as price traded lower, price wouldn't have managed to rally and close higher for the day. So basically what happened is the sell orders got triggered towards the downside, but they could not find any more sellers. And later in the day on a Friday, price then closed higher over here. So the message that the market is telling you that the path of least resistance is no longer towards the downside. So now I have this. Number one, we have the higher time frame trend on the weekly chart. Number two, we have this pin bar that gives us clues that the path of least resistance is towards the upside. And number three, we have the short sellers who are now trapped. They are now trapped because they shorted a breakout towards the downside. So all these three factors line up together. To me, it was a good trade to get long. And I believe my friend, my trading partner, my friend, he got long and placed his stop loss just below the low of this pin bar. He had two take profit targets. The first one is at this swing high over here, and the second take profit target is at this resistance area over here. So it was a winning trade for him, but the point is, not to show you winning trades, but to show you the thought process of it, and to not focus on the outcome of this particular trade. Rather, you focus on the thought process of your trades, follow your trading plan, and the outcome of the trade is basically irrelevant. Whether you win or lose, it doesn't matter, because you're looking at the big picture, the next 100 trades, the next 1,000 trades. So the outcome of just a 1-2 trades is basically, I'll say, meaningless or random in the markets. And why do I say so? Now look at this next particular trading setup. This is the New Zealand dollar weekly. And again, you look at the weekly chart, the trend is down, right? You can see that there's obvious lower highs and lower lows, right? Lower highs over here, lower highs, and lower lows here, and lower lows here. And I'll say the momentum is definitely towards the downside on New Zealand dollar weekly. Looking at the daily chart, there was a trading opportunity to get short, and it's actually over here. We have this key resistance over here, and traders would have gotten the opportunity to got short when price tried to break out, but it became a false breakout. So it's a bull trap, and those who got long got caught, and price give you this bearish price action to get short. So it looks somewhat like a tweezer top or whatsoever name you call it, but basically the first candle you look is a doji, signifies indecision. This candle after the doji, it tells you that price tried to rally higher, tried to retest the previous day high but failed to do so and closed lower for the day over here. So this is a sign that the bulls have lost control. The breakout towards the upside has failed. The bulls are now trapped and you are in tune with the longer term trend, which is the weekly trend. So again, this is a valid setup. In fact, it is the same setup as the previous pound yen chart, only now it's towards the downside. So looking at which, traders who got short, they will put their stop loss just above this high over here. And price did trade lower. And depending where is your first profit target, alright? It could be at this swing low over here, or it could have been this swing area over here. It really depends on your trading plan. But I would say, if you do look to take profits at this swing low over here, price did trade lower, but you failed to reach a profit target, and then it rallied higher once more, stopping you up for the trade. So again, between the pound yen and this New Zealand dollar trade, they are both identical trading setups. They are both following the same trading plan. Only difference is one is to long and this is to short. But the outcome of both trades is vastly different. And the point I'm trying to make in this week's market analysis is this. The outcome of a trade is not important, but rather you should focus on executing one good trade, and one good trade. And you should be looking in terms of the next 1,000 trades. So to end off this video, right, my take is this, right? Short term, right, the results are random. They're random, right? You can win, you can lose. And it does not even tell you whether you have an edge in the markets. To know whether you have an edge in the markets, you need to look long term. And that's when you can let your edge play out if you have. And you're looking typically from the next 50 trades onwards. 50 trades onwards. 50 trades and more. Because if you are looking anything less than 50 trades, right, it could simply be noise in the markets, and you do not want that to affect your trading decision or to hop from the next trading system to the next. My own personal take is to have at least 100 trades. At least 100 trades to tell whether you have an edge in the markets. So that's all I have for you guys this week. I hope you guys enjoyed this week's market analysis. With that, I wish you boys and girls good luck and good trading. I'll talk to you soon.